Welcome to The Explainer, where we're digging into a really fascinating day on Wall Street. A day where the market truly had a split personality, caught between the incredible excitement for an AI future and the growing fear of a bubble.
All right, let's get right into it. The day we're talking about is Friday, October 3rd, 2025, and what a day it was. Really a mixed bag that had a lot of people wondering what in the world was going on.
And you can see that split decision right here. I mean, look at this. The market was basically being torn in two. You had the Dow, with all its big traditional companies, climbing a solid 0.5%. But then, on the flip side, the tech-heavy Nasdaq took a hit. And that left the S&P 500, well, it was basically flat as a pancake. It just didn't know which way to go.
So, why the huge disconnect? That's what we're going to break down today. We'll look at the two big stories fighting for control: hopes for a rate cut versus fears of an AI bubble. Then we'll check out the stocks that made big moves, explore a few investment scenarios, and wrap it all up with the key takeaway and risks you need to know about.
Okay, first up, this whole idea of a market with two minds. It really was a tug of war all day long.
All right, if you boil the entire day down to its core, this is what you get. The single biggest positive, it was actually bad news. We got some weak economic data, and that sent expectations for a Federal Reserve rate cut through the roof. The market loves the idea of cheaper money. But, and this is a big but, the single biggest negative was the rising fear that we're in an AI bubble, especially after some heavy hitters like Jeff Bezos started using that exact word. That fear really spooked the tech sector.
So let's dig into that bull case first. And it's a bit of a paradox, right? Because all this optimism was actually sparked by what sounds like bad news for the economy.
And here's the number that got everyone's attention: 50.0. That was the September ISM Services PMI. Now, to put that in perspective, anything over 50 means that huge part of our economy is growing. Anything under 50, it's shrinking. So a flat 50, that means the services sector has basically ground to a halt. It's stalled.
And how did the market react to that news? Well, it was instant. The second that number came out, the odds of the Fed cutting interest rates in October just skyrocketed to 95%. Suddenly, it wasn't a question of if a rate cut was coming, but when. And the market decided it was coming very, very soon.
So who were the winners in all of this? This wave of rate cut optimism was like a shot in the arm for certain parts of the market. You know, the sectors that really benefit from lower borrowing costs? We saw those typically steady, defensive sectors like utilities and healthcare jump up over 1%. But the really big story? Small cap stocks. The Russell 2000 index, which tracks those smaller companies, actually soared to a brand new all-time high.
All right, now for the other side of the story, the bear case. While a part of the market was getting excited about rate cuts, a whole different fear was creeping into the tech world.
And a huge reason for that fear came from this quote right here. The founder of Amazon, Jeff Bezos, came out and called the AI craze a potential industrial bubble. Now, he did say it would eventually change everything for the better, but that's not the word the market heard. The word that echoed across trading floors was bubble, and that was all it took to trigger a sell-off.
And it wasn't just Bezos. The CEO of Goldman Sachs, David Solomon, basically poured gasoline on that fire. He said, yeah, AI's potential is huge, but investors are getting way too excited, taking on too much risk. He warned there could be a reset at some point. And when the head of Goldman talks about a reset, people listen.
So you had these big warnings from the top, and then you had a bunch of other real-world headaches piling on. You've got new export rules hitting chip companies like Applied Materials, who said they'd lose a whopping $600 million in revenue. You had Palantir getting absolutely slammed by a report about major security flaws. And, to top it all off, the US government was still shut down, meaning we weren't even getting key economic data. It was just a perfect storm of uncertainty.
Okay, let's get into the movers and shakers. How did all this push and pull actually play out for some specific key stocks on the day?
This table just says it all, doesn't it? It's the whole day's story in one snapshot. I mean, look at Palantir, down 7.5% after that report on security issues, and Applied Materials down almost 3% on fears about those new China export rules. But then you see the IWM, the ETF for the Russell 2000 Small Cap Index. It's up, hitting a new high, and even Amazon, Bezos' own company, dropped over 1% after his bubble comments. It perfectly shows that split we've been talking about.
So with all this conflicting information, what are you supposed to do? How do you navigate a market like this? Well, let's look at 3 possible scenarios and how you might think about them.
It really comes down to which story you believe in more. If you're a bull on AI, you think the growth is real, and you might focus on the leaders, like an NVIDIA. The big risk there? Well, the bubble actually pops. The base case says, hey, the Fed is going to cut rates, so maybe you look at those small-cap stocks through something like the IWM ETF. The risk? Inflation stays sticky and the Fed doesn't cut. And then there's the bear case. You think the warnings are right and a big reset is coming. In that case, you might look for a safe haven, maybe something like gold. Your strategy really depends on which of these paths you think is most likely.
Okay, let's bring it all home. What's the bottom line here? And what are the biggest risks you need to be watching? When you strip everything else away, there are two huge risks to keep on your radar. Risk number one, an AI reset. Are we going to see that bubble, if it is a bubble, actually burst? And risk number two, a stubborn Fed. What if inflation doesn't cooperate and the Fed decides it can't deliver those rate cuts that the market is so sure are coming? Those two things are the whole ballgame right now.
And so, that brings us to the final question, the one that's on everyone's mind. The market really is at a crossroads. Are we witnessing the dawn of a brand new AI-fueled economic boom? Or are we watching the twilight of an industrial bubble just before it pops? That's the question.